Good afternoon, ladies and gentlemen. Welcome back to Business Today Television. We are on Monday, where the markets seem to be supporting 22,800 on the Nifty, and at the moment we are at 22,900, still down 27, but a very sharp relief from the early morning scare that we had. Be that as it may, our first segment today is on top funds, where we look at quality products, quality equity schemes that are available at a substantial discount to their latest all-time highs, and they represent an opportunity in the broader market for mutual fund investors to buy into quality, buy into fear, and make a decent return not only in the short term but also in the long term. This is SBI Multicap Fund that we are talking about. But first, the disclosures. At top funds, what we do is we don't offer an opportunity or advice to buy or sell any fund or any stock. This is merely research which gives you a peek into the quality products that are available in the market at a very reasonable price to their all-time highs. Another disclaimer: if you wish to get into this particular scheme, you will have to take an advice of an independent financial advisor, and neither anybody in Business Today Television Research or myself included have SBI Multicap Fund in their portfolio. With this background in mind, ladies and gentlemen, let's analyze SBI Multicap Fund. The net asset value of this fund is 15.71. This fund was launched somewhere in March of 2022. So for the moment, this is almost a 3-year-old fund. Each year the fund has returned 16.6%, and at the moment the highest net asset value was somewhere like 17.72. It is now available at 15.77. First, why do multi-cap funds make sense at current levels? Ladies and gentlemen, we've undergone a very sharp correction from September onwards. The Nifty itself has corrected 14%. Mid caps and large caps have corrected anywhere between 20 and 24% on the index level. By this correction, they have entered the classical definition of a bear market. Can markets go down further? Well, of course they can. Will they stabilize at current levels and consolidate to make fresh upward ticks? Yes, they can. Nobody knows what will happen in the future, but what one can do is sensibly plan into buying quality assets available at relatively lower prices. Now, why does a multi-cap scheme make the cut at this point of time? The answer is very simple. At a certain point of time, with a simple single window purchase, what you do is you get giant caps, large caps, mid caps and small caps at one shot. So when you look at SBI Multicap, it invests at least 25% in large caps, mid caps and small caps. This is how SEBI has mandated multi-cap funds to invest, and that's the reason, ladies and gentlemen, why they make sense. You don't have to get into a large cap fund, you don't have to get into a mid cap fund, you don't have to get into a small cap fund. All that you have to do is buy one fund that invests sensibly in all these three spaces. Now, SBI Multicap Fund has a net asset value of somewhere like 18,700 crore rupees, which is invested on 49 stocks. When you look at 18,700 crore rupees, about 95.77% is into equity assets and about 3.35% is in cash. When we look at the breakup of multi-cap funds, SBI Multicap, we find that 28.6% of its assets under management are invested in giant companies. This is below the category average of 34%. Large caps account for 16.5% of AUM compared with the category average of 20. So SBI Multicap Fund is underweight on large caps. Mid caps account for 36.6% of AUM compared with a category average of 35%. So slight overweight on mid caps. Small caps are large in terms of AUM allocation, 18%, compared with a category average of 11%. Top 10 stocks account for 36% of AUM, which is 18,700 crores. Top 5 stocks account for 20%. Now let's look at the top 10 holdings of SBI Multicap Fund. In a rare occurrence, the top holding of SBI Multicap Fund is Kotak Bank, accounting for 4.7% of its total portfolio. Jubilant Foodworks, the maker of Domino's Pizza, accounts for 4%. Muthoot Finance, India's largest gold NBFC, accounts for 4%. KPR Mills and ICICI Bank are at the 4th and the 5th slot, respectively 3.9 and 3.6% of AUM. And similarly, Torrent Power, Bharti Airtel, Krishna Institute of Medical Sciences, United Breweries and Divi's Lab are among the top 10 holdings of this wonderful fund. Now comes the most important part, which is return. If you look at how SBI Multicap Fund has performed on a 1-year basis, it has handsomely outperformed not only the multi-cap category, but it stands at rank number 1 in terms of the category. There are 24 funds in the multi-cap category, and SBI Multicap Fund with a 1-year return of 15.3% has the first slot. Yes, in the period of 6 months, 3 months, 1 month and 1 day, SBI Multicap Fund has fallen, but even in these segments, it has fallen the least. So that, ladies and gentlemen, talks about quality, and that is something that you need to pay attention to. Should you get into SBI Multicap Fund, remember, this should be anywhere between 10 to 12% of your overall AUM. In the morning, we had analyzed Kotak Multicap Fund, and the other is SBI Multicap Fund. You can choose any one. More importantly, you can choose the multicap category over flexi cap and over large cap, because it provides you a lot of flexibility when it comes to choosing a wide cross section of stocks which over a period of time have corrected substantially, yet they offer an opportunity to get into it at a far lower level than what it was. If you just look at 1772 versus 1572, that's 2 over 1772. It's at an 11% discount to its all-time high. So this, ladies and gentlemen, is an opportunity to get into SBI mutual fund, either as a lump sum, but preferably as a SIP. Now, one more important thing is, because mid caps and large caps together are more than 50% of any multi-caps portfolio, it essentially means that you inject volatility into the system, because these companies have a very high beta. It essentially means that if you invest over a period of 5 to 7 years, that is the time when these counters bloom and they give you quality compounding returns. So today's fund is SBI Multicap Fund. Again, this is not an advice to buy or sell it. Should you wish to add it to your portfolio, please consult an independent financial advisor. Let's now get back to the markets, and we are now joined by Mr. Neeraj Dewan, who's been investing into equity markets for a very, very long time. Namaste, Neeraj ji, and it is such a pleasure getting you on air and trying to find out quality stocks that you are advising your clients to buy. A very warm welcome to you, sir. 22,800 seems to have held on the Nifty for the third instance in a row. What is your view on sentiment on Dalal Street?
Yeah, namaskar, sir. It's very good to be with you and on this channel. I think that, definitely there is a lot of fear in everyone's mind with the way market is corrected. We saw this correction has been happening since October, November. We saw correction. We saw very good shift recovery. But then again, we are testing the 20,800 3 times. I think around these times, what we've seen is that, like we've always seen in the corrections, that mid caps and small caps will fall more, because even in the good time, they will give you good returns. So, and this time they definitely fall more than what the large cap. If large caps have corrected by 11, 12%, they would correct by 20, 25, 30%. But then these are opportunities. So what we are recommending to our clients is that these are opportunities for long-term investment. We've all been waiting for correction. We've been saying since last year, last quarter, market is very expensive. We need to get a good entry point. I think this is that entry point which everyone was waiting for. So one definitely has to be very stock specific because the bottom formation, or even if we are near a bottom, this normally is a very painful period. You get stocks losing 10-15% very fast. So one needs to be very stock specific, and one needs to be accumulating slowly long term good return is long term return.
Okay. And Neeraj, I must thank you for sparing your time today. I think it's just sheer good luck that you are with us, and the Nifty has bounced very strongly off its intraday low. 22,740 was the intraday low. We are at the moment on 22,946. So it's a easy 200-point uptick that has come in from a very strategic level. As you were pointing out, 22,800 has been tested thrice. Let us hope that the index starts to consolidate at current levels. Let me very quickly get into the market and tell our viewers what the broad... we are trying to fix that, sir. We'll just come back to you. The pharma index is up 1.3%. The mid cap index is 1/3% higher. The small cap index is about 0.2% higher. And you have the PSU banking index up 0.5%. Neeraj, can you hear me, sir?
Yeah, I can hear you now. I can hear you.
Am I audible to you?
Yes, you're audible now.
Okay, sir. Now tell our viewers, what has your research team come up with in terms of buying quality at these levels? Where are you hunting? And what looks good to you?
See, I think that there's definitely some change in the budget because of the income tax cut. So some shift is definitely happening towards consumption, which earlier was, mostly towards infrastructure, capital good, those kind of sectors. But some focus needs to be put on consumption also. So it's a mixture of infrastructure, capital good, some selectively defense stocks, selectively railway stocks. And then even in the real estate space, because interest rates have been cut once and there's a possibility that we can have a couple of more cuts this year. So that is one segment where we're looking at opportunities. Plus, even the consumption space, whether it's the four-wheeler space or whether it's, white goods, there also I feel one should be looking at opportunities because there also stocks have corrected. Like today we saw, even after such a good booking number from Mahindra and Mahindra, we saw a good correction in Mahindra & Mahindra. So you're getting opportunities across these sectors to accumulate in this fall.
Okay. Neeraj, you are a very heavy buyer of quality stocks when they are trading in pain. I must tell our viewers, I meet Neeraj once a month. He is also based in Delhi. And he often tells me about how he has been able to catch a falling knife. And one good thing is that he always buys quality. So Neeraj, please tell our viewers what have been the last 2 or 3 purchases that you have done.
So basically in this fall, what we've been recommending and buying at these levels, there's a company called Garware High Tech Films. They have been doing very well. The capacity utilization has also been going up for them. And recently also the last quarter is also encouraging. So this is one stock where we are recuperating. And the other one would be Philips Carbon Black. There also the management has aggressive plans. The stock was doing very well, but the stock has corrected from the top. And in the consumption space, in the hospitality space, East India Hotels is one space. If you compare it to the other hotel space, it's comparatively very attractive. So East India Hotels is another one. So there are these, 3-4 names that I mentioned. Plus,
let's analyze.
Larger space is Larsen & Toubro.
Okay. So the 3 names.
Then there's DLF in the real estate space. In the FMCG space, Britannia looks good. That is one space to be accumulated. ITC is another one. So these are some of the names, because there is a lot of opportunity across sectors. So I felt would
Okay.
be good to
So
good to.
what I found out, yeah, Neeraj, just a moment, please. So we caught Garware High Tech,
Yeah,
and in the large cap space, you mentioned LNT, DLF,
yeah,
Britannia, and ITC.
yeah.
There were two other stocks that you mentioned after Garware High Tech. Could you please name them?
Yeah, in the mid cap space, I mentioned Philips Carbon Black. Philips Carbon Black, because management has aggressive plans
Yes,
and the
PCBL.
stock has corrected a lot. So East India Hotels is another one, which when you compare it to the other hotels, valuation
Okay.
wise, it's quite attractive. So these are the other names I took in this space.
Okay. What we'll do is we'll just take a detour into Garware High Tech Films. This is a low float stock where liquidity is always at a premium, and we have seen an all-time high of 5,280, which was hit on December 24th. The stock has corrected to 3,395, and when you see the latest quarterly results of Garware High Tech, sales rose 3% in the third quarter earnings to 466 crores, and net profit was up 9% year on year to 61 crore rupees. Please keep an eye out on Garware High Tech as well, but it's always good to have an independent view as well. This is something that Neeraj ji has recommended for all long term holders of the stock. Again, let's visit the consumption space. Neeraj ji, you mentioned Britannia, you mentioned ITC, EIH hotels. These also ring true with the fact that the government has added 1 lakh crore rupees in terms of the tax benefits that it has given to middle class. Within this space, are there any other stocks that you are looking at?
So basically, there'll be across sectors. Like even when I say real estate is also a consumption play, if you can take it that way. Because DLF, for that matter, has been doing very well. Whatever booking they have in the luxury segment, they have launched. They have a good list of more launches also, which will happen for April onward. So DLF is another one which I feel can do well for a long-term investor. And besides this, there is definitely the interest. Whether it's one is like I can mention a couple of names which will be related to infrastructure, which can do well over the longer term. And again, results were encouraging. One is Surya Roshni, which is into steel pipes and tube. The steel pipes and tube business is doing well for them, and as they had promised, this quarter showed improvement. So that is one company which I feel can do. And then another one which I was mentioning was Agarwal. So in the roads segment, Agarwal Industrial is a good company. Again, there's been recent correction there. They have a good market share as far as the road segment is concerned. So they're into bitumen, which is used for road manufacturing. So this is another one which is a good stock to look at.
Okay. Neeraj ji, in the erstwhile, friendly and popular space of PSUs, especially banks, I remember both of us discussing Punjab National Bank at 50 rupees, Bank of Baroda. You will not believe you purchased at 80 rupees. And, which ones that we used to talk about? These two in particular. Are they
Yeah,
still
Union
your
Bank
favorites
also.
or yes, Canara Bank?
Yeah.
Yes,
Canara Bank is
Canara
doing
Bank. I
well.
remember before the 5:1 split. I think
Yeah.
I remember you purchased at 120 rupee levels. So 120 went up to 500.
So yeah, so banking
Within the
space.
PSU space, are there still any favorites left?
Yeah, I think banking space. initially whenever there's a rate cut, there may be an initial issue as far as interest rates are concerned for banks. But for the medium term, definitely it's a positive because credit growth will pick up. So PSU banks, like you rightly mentioned, whether it's Bank of Baroda, PNB, Canara Bank, Union Bank. So besides State Bank, of course, State Bank is definitely on top of the list, but then State Bank is a large mega cap. But these three, four banks in the PSU space which are doing well on operations, I think these are also available at very attractive prices. I think these should also be accumulated in this correction because I feel next 6 months to 9 months, things should look good as far as credit growth is concerned.
Okay. And Neeraj, what are spaces that you are completely avoiding? What, no matter what the price, doesn't look good to you?
See, IT space is one where I'm not too sure of what is going to happen in the short to medium term. Though large cap IT may be used as a defensive for some people, but I'm avoiding that for the time being because there's some more clarity which is required. And then even the metal space, though, you have to be very stock specific there. There are some stocks in the non-ferrous space which are corrected a lot, which may be looked at, but otherwise metal space depends a lot on global volatility, on currency movements. So that is one space which I am for the time being not really looking at, though if they are correcting so much at some price, even they should also be bought. But right now I'm not. Besides a couple of non-ferrous names.
Okay, okay. So metals is not a hunting space for you. At the moment, you're concentrating more on large caps, plus of course the consumption space. Neeraj, Delhi is a hub of automobile companies. Anything that looks good, Maruti, Hero Motors, Eicher Motors, all these are companies that have grown in front of us. Plus this 1 lakh crore rupees benefit that has come in from April onwards. So nothing looks good in auto space. Maybe Hero Motors.
Yeah, I think in the four-wheeler space, Maruti should be good. So the stock has not corrected too much, but then there is this advantage because of the budget. So Maruti is one which I'm looking at. Mahindra is doing well. If you see over the last few quarters, and I think they should continue doing well. So this correction, small correction, whatever is happening, can be used as an opportunity. So again, in the two-wheeler space, right now I'm not really looking at any particular space, any particular stock there. It's more in Maruti and Mahindra.
Okay, M&M of course has come up with a great announcement that two of its electric vehicles where bookings opened for advance have gathered about 8,400 crore rupees from initial costs. What else is looking good to you, Neeraj? Defense you are avoiding. How about gold financing companies, NBFCs, anything that catches your fancy?
See, as far as the defense is concerned, there also, there has been good correction in some of the stocks. There's some of them because of not so good results. Like Data Pattern is one of them. Data Pattern is a company is doing very well, but it's corrected now. This quarter is also not that great. But normally last quarter is when you see real traction for. So Data Pattern, this correction can be looked at. And another one is Masgor Dog. Where also I've seen a good correction happening, and they have a good order book. There's a talk about some new orders which may come, with some news that come a couple of weeks back. So that can also be looked at. So defense should not be totally avoided because the spending in defense will continue. The Make in India will continue, though definitely there would be some imports from US which may happen because of the tariff situation. But still, stock specific, there are opportunities. And so in NBFC, I'm actually more looking at banks right now. I think banks should be one in the NBFC space or the financial space. Others to be looked at can be PFC, RAC. These are companies which are doing well and valuation wise again they are attractive, so they can be looked at. And but purely, I think
Correct.
banks, even in the other smaller banks like a Karur Vyasa, or a Karnataka bank, they are available at very good valuation. So for a long-term investor, it makes sense to accumulate them.
Okay, Okay, so that's a fairly strong cross section that you've talked about in the NBFC space. Remember, erstwhile favorites PFC and REC were favorites not only for the trader community, where you made supernormal returns, but also for those who looked at the fundamental part of the performance. Profit and sales for both these companies grew in very strong double digits, 14-15% year on year, when we had that wonderful bull run. If I remember correctly, RECL, which is Rural Electrification Corp, actually moved from 200 rupees to 600 rupees in a span of less than 3 years. Let me just confirm that for you. Yes, the all-time high is 625, which we saw on July 2024, and of course the stock was sub 200, 126 in 22nd of 2023 May. So that's the kind of phenomenal return that people have made on stocks such as REC and PFC. Finally, before we draw to a close as far as this discussion is concerned, Neeraj, any favorites in the pharma space?
Yeah, pharma numbers have been pretty good. So I feel that API formulation is one
Yes.
space where there is good growth happening. We've seen DV's Lab doing so well in the past couple of quarters. I think DV's Lab is one which I'll stay positive on. And besides DV's Lab, there's another company which got listed some time back called Senores, which is also something into similar business. So on the call,
Yes.
the movement is quite aggressive. They are saying that our growth will continue and we should do well over the next 2-3 years, and the growth will be very good for them. So they have a US plant also, and they have a good business model. So I think these API formulation, these two companies, I feel can do well for a long-term invest.
Okay. Sedora's IPO was listed somewhere in early part of January. The issue price was 391 rupees per share. Let's look at what Sedora's is doing at the moment. Remember, a lot of IPOs are trading at a substantial discount to their listing price. Yes, and there is absolutely Sedora's at the moment is 501 rupees against an issue price of 391. The stock got listed at 538. So this is available near its issue price, listing price, and it had gone down all the way to 438 rupees on 13th of Jan. So ladies and gentlemen, this is something that you can also look at. This is an undiscovered stock, and in terms of 4 or 5 that Neeraj ji has mentioned earlier, they are Garware High Tech, Philips Carbon Black, East India Hotels in the mid cap space, at Sonaras in the small cap space, and of course in the large cap ones he likes L&T, DLF, Britannia, ITC, and Divi's Labs. 320. And Neeraj ji, what has happened is your presence has ignited the bulls on Dalal Street. For the moment we have a green tick on the index. 22,962 is what is there, 34 points in the green, and not only that, it's recovered from 22,740. So a 8-day fall, ladies and gentlemen, has been absorbed, which is a 1,000-point fall on the Nifty alone. And today again 22,800 has been tested. Again it has held for the bulls. Is this a new consolidation that is happening in the market? Only time will tell. But this is a sign of modest positivity in the market. Neeraj ji, how would you categorize today's trade?
Let's see what happens, whether this this sustains or not. But otherwise, also the kind of negativity we've seen in the last few days, last 8 trading sessions, like you mentioned, and today morning also. So once one pullback rally, one short covering rally was anywhere due. So I feel that this is in the beginning. This is definitely looking like a pullback rally, and then we'll take it from there. Let's see how the news flow is, because now till early April there's a possibility that the tariff thing is really not going to come immediately. So till that time now, and March normally is the period when you again see some equity tightening, some people taking out some money from the market. So let's see whether what level this pullback rally takes us to, and then from there we'll take it, take a call.
Okay, fair point. That, ladies and gentlemen, is how Neeraj ji is looking at the market. One final question to you, sir. This purchase, in any case, if our viewers want to do, is this a lump sum that you want to invest in Garware High Tech or PCBL or EIH or maybe even DVs, or will you sort of go for a piecemeal approach, maybe 10% now, maybe 25% later? What's the view?
I think 20-25% can be bought now because we've seen a decent correction. One should not be going lump sum and putting everything together because markets are still quite choppy. So let us first come out of the woods. Let's market, there'll be some visibility of a sustained recovery. Then we can look at putting in more money. But I think 20-25% can be put at these levels also.
Okay, 322. Any view on the Adani Group stocks?
Yeah, actually, Adani Group stock, there's only one stock which I've been recommending is there in the portfolio of some of the clients that I've suggested is Adani Ports. So that is one which we're holding on to, and we want to hold on to this stock for a longer period. Besides this, I'm not really invested into any of the Adani Group stocks.
Okay, 1087, ladies and gentlemen. Remember, we've seen a 1400 rupee price on Adani Ports as well. Just a moment, let me look at what the all-time high on Adani Ports is. I distinctly remember a price of 1400. Yeah, it's actually 1615. Again, the price that we saw on 3rd of June. And from then on, it seems to have corrected to the extent of 36%. And the price that you see, which has been tested thrice, is the lowest since 2nd of January 2024. So a 1-year low on Adani Ports. Please keep this stock also on your radar. This is something which is working really well. $324 now, and lots of good stocks now coming back in great move. Godfrey Phillips 17% higher. Remember, we had discussed early morning the results on this. 7026. M&M 3.5% lower, 2832. Nothing to be bothered about. Mannapuram Finance 8.5% higher, 193. Glaxo Pharmaceuticals 16% higher. So lots of strong outperformance on individual stocks. Glenmark is up 3.5%. Bajaj Finserv is up 2.7%. There is a strong move that is coming in on one more stock that I had checked up in the morning. This is Aarti Pharmaceuticals, 9% higher at 787. Very, very heavy volumes on this one. NLC India 8% higher on 210. So these are the stocks, ladies and gentlemen, which are bright sparks in an otherwise weak market, but that weak market is also consolidating at these levels. Neeraj ji, if you were to highlight one or two stocks at today's fantastic performance, which are the ones that you would look at?
Basically, like you mentioned, that your Godfrey Phillips is doing very well. But then I think that's again news-based, the kind of news which has come. So it's maybe because Philip Morris is looking at increasing the investment in India, and they have a tie with them with so that may be one reason why the stock is doing so well today. Even the results are very good for them. And sometime back, even when I was listening to the management, they also mentioned that there is a scope for further improvement as far as the margins are concerned. So I think this stock, on back of that and plus this news, is doing quite well today.
Okay, fair point. We'll keep this one in mind as well. Neeraj, in terms of third quarter earnings, which have been sectors that have disappointed you, and where have you found hope, green shoots?
I think some of the banks have done well. Pharma companies have done well. So banks, pharma companies, and a couple of these automobile stocks, they've done well. But infrastructure capital goods is one space where, because third quarter is normally also very good quarter. So
Yes.
there was some hope that there will be good recovery. But I think that pickup has not happened in this space. I think because government spending has not picked up the way we were expecting it to pick up in the third quarter, and some execution slowdown has also been there. I think because of some liquidity tightening, because of the interest rates. So I think those things they impacted the performance of these sectors. So I think and metals also not done that well. I think that again, because of the global volatility, again they have not been able to do that well. So I feel that as far as the infrastructure space is concerned, there I think things should start picking up because liquidity is being eased and the interest rate cut has happened. So last quarter normally a lot of bunching up happens with the execution is concerned. So let's see how it goes for the fourth quarter for this sector.
Oh, fair point. 328, ladies and gentlemen. It's a green close to the market, and something that we've been waiting with bated breath, with so much of pain that we've seen in the last 9 days or so. Neeraj, thank you so much for your time. You are a lucky mascot, and from your side, I have taken this permission that you will come at least twice a month.
Thank you so much. It was good. I was here on the channel today, and we saw green on the screen.
Yes. With this hope that this is probably an intermediate low that the market has tested and done very well from these levels. Let's hope Neeraj's presence now emboldens the bulls. We have seen a low of 22,740 today, and from then on, it's yes, fingers crossed. Yeah. We've seen 22,971. The Nifty will close definitely above 22,940. So a 200-point uptick, ladies and gentlemen. And with that, Neeraj, thank you so much. We will definitely remember Garware High Tech Fibers, PCBL, EIH Hotels, as also you had mentioned L&T, DLF, Britannia, ITC, and Divi's Labs. This is what I recollect offhand from your picks. Thank you so much for your time, sir.
Thank you, sir. Thank you.
Okay, ladies and gentlemen, we'll take a detour into the market very quickly and look at how strongly the market has closed. Please note that the intraday low for the Nifty was 22,740, and that has been retested for the fourth time in a row, and it has held. Will this hold true in the future? Only time will tell. Much will depend upon how much have FIs sold today. This is a very, very positive development for those who believe in charts, that a certain level, which is a 6-month low, has been tested after a 14% drop on the Nifty. The mid caps and the small cap indices have respectively entered bear market territory with a correction of more than 20% from their all-time highs. Is that enough? Only time will tell. But a very close look at what has happened today is that quality has got rewarded. I can't remember the last time Godfrey Phillips was the top traded counter on National Stock Exchange. 2029 crore rupees has been traded. Very strong set of earnings being rewarded by the market, 17% higher. Similarly, HDFC Bank is up 1.5%. Reliance is up 0.7%. You have Infosys down 0.5% and ICICI down 0.6%. These four stocks are the heaviest weighted on the Nifty. What has contributed to Nifty's uptick? Well, it will be Reliance and HDFC Bank. Let's just look at it. Yes, HDFC Bank has contributed 26 points. Reliance has contributed 7. Ultratech Cement, Power Grid and SBI 5 points each. What has pulled the Nifty down? This is profit booking only. Bharti Airtel, M&M and ICICI Bank. All these stocks are very, very strong on their charts despite the broader weakness. So ladies and gentlemen, as we have highlighted two major funds today, please take a look at them. SBI Multicap Fund and Kotak Multicap Fund. They provide you an opportunity to get across asset classes back into the market at very nominal net asset values compared with the kind of 4, 5, 6 digit prices that you see in the market. These are quality stocks. These are quality funds holding superb quality stocks available at a discount. Please consult your financial advisor before you take any step into them. Thank you for watching. It's been a very, very exciting day for the markets. A sharp low and an equally robust response from Nifty Bulls. Thank you for watching. Good afternoon, ladies and gentlemen. Welcome back to Business Today Television's special show, Market Guru, where you get to meet the finest brains that there are on the Lal Street, individuals and professionals who've made